All right, let's talk about the mystery charts and the methodology and action. Here's our new mystery chart for the week. We actually have two. Notice that it's in a really nice uptrend. It's very persistent uptrend for the most part. It's accelerating, and then it pulls back to the moving average. And you can see there's the trend accelerating higher. My Kunash just slipped out. I said there's nice Landry light, many days of Landry light, about 60 days of Landry light before it touched that moving average to complete a Landry light pullback. Now notice it is below the 30 EMA. The entry is above the 30 EMA, well above the 30 EMA. Entry's here, stop is here, initial profit target is up here. If it continues to drop, now not that the 30 EMA is a hard and fast rule, like if it's below the 30 EMA, you won't buy a stock, but as a general rule, you don't buy a stock if it's below the 30 EMA until unless it crosses back above and triggers. There might be some deep pullbacks that are an exception to that, but for the most part, the 30 EMA is a good reference. So we'll see how that one shakes out. Here's another one for this week. Once again, notice a recurring theme: persistency, acceleration, and a pullback, obviously. Lots and lots of Landry light and a TKO type of move, trend knockout. Didn't quite get back to the moving average, but it's also a trend knockout. A lot of patterns will set up, or a lot of setups will set up in a similar fashion. A TKO might be a Landry light pullback, and a Landry light pullback might be just a generic pullback, obviously. And some other patterns that I trade, but most of the patterns I trade, if you're new to me or newer to the methodology, are pullback related. Entries there, stop is there, initial profit target is up there. We'll follow up with this one in upcoming webinars. If you want to see all the mystery charts going back to when I first recommended them, you can go to davelandry.com/archives. To see the newer ones, youtube.com/Dave Landry, and go pull up Dave Landry's core trading service there. I put the delayed services up on YouTube. I actually put them live there for my international clients so they could do the AI translation, which seems to be going really well so far. So if, well, you might be having a hard time understanding me today, but if English is not your first language, then no problem. The AI translation on even my Kunash speak is very good on YouTube. Anyway, we have another mystery chart update. Nice uptrend intact. Again, lots and lots of Landry light. We pull back to the moving average. We also have lots of persistency. As you can see here, persistency is a market's ability to go up day after day after day. It's one of the most powerful concepts. I think if you're going to spend time studying something, spend a lot of time studying that. And I think that's going to really help you out when it comes to trading. Anyway, pull back to the moving average. Landry light, which is the number of lows greater than the moving average, which is average, or highs less than the moving average. In a case like down back here when it was in a downtrend, this counts the number of highs less than moving average, goes to 0 when you intersect the moving average, and then +1, and then +1 afterwards for every day above the moving average. So it doesn't measure magnitude. You can see this down here is getting bigger and bigger and bigger, even though price was coming down to the moving average. So it's just a day count, but it can help you longer terms. Like, holy moly, this market has had 100 days of Landry light. That might be a place where the market might be due to correct. Not that you want to try to time that correction, but if you haven't taken profits and it's kind of extended like that, maybe you take partial profits or just kind of use it or keep it in the back of your mind to know whether or not a market is extended. Anyway, there's all the parameters down below. This was TGen. Entry was here, stop was here, initial profit target is up here. We haven't quite hit that yet. It is pushing higher today. It's having a really good day. So I would encourage my clients, which I already did actually in Facebook and the Facebook group, Dave Landry's Trend Traders, to keep an eye out. I call it smoke 'em watch. Smoke 'em if you got them. Keep an eye out for those partial profits and be willing to get out a little early if it has a hard time getting there. In other words, apply a little discretion. Now, this is another good example of just follow the plan. I know, easier said than done. So we initially, the first day we're in, we're up $584 per 100K. So that's not bad. It's much better than poke in the eye. A couple days later, we're now down 152. So that's obviously $600 and change slide. And then a few days later, we're back to being up once again 1,054. And then we gave all that up and then some, right? And now we're down $8. So that's $1,064 swing to the downside. And then we come right back up $1,600 and change as of a few minutes ago. And again, we're looking for, or I don't know if I mentioned already, but we're looking for 2% profit target on the overall account. So in this case, it'd be $1,000 based on a hypothetical 100K account. So it'd be $2,000 total, and then you divide that into two because you're taking half profit, so that'd be a 1% profit overall. And keep in mind that this is not where the money is in the first loaf. The real money is in the second loaf. But if you get the initial profit target out and the trend doesn't materialize, and you scratch out at worst on the remainder, and you do that over and over and over again, it keeps the lights on, it keeps you in the game until you finally knock it out of the park. And that's the secret, is those outliers. And as I've said 1,000 times, I've been accused of making it sound too elusive. And when you're trading momentum and trends and trend following, okay, it's kind of all the same thing, right? The way you really make money is through those occasional outliers when that market really takes off. And as I showed a few weeks back, I forget how much it was, like 17,000 or forget that, or 1,700% change in one stock in the Landry 100 made up for all the losses for the year prior, all the taken losses. When that 1,700% gain came out and went into the closed trades, all of a sudden, all the closed trades were, it covered all of those losses and then some. So that outlier is very important, that you catch an occasional outlier. Here's the Mr. Chart update. This is VG. You can see the parameters down below there. And again, you could download these archives, davelandry.com/archives, and then on my YouTube channel, youtube.com/Dave Landry. Anyway, you can see it was in a decent little uptrend from lows, and then it began to accelerate higher. Bigger picture wise, it was also a cup and handle. As I say ad nauseum, I don't trade directly off a big picture technical analysis, but it does help me to build the case for the position. So if I have a bow tie and a cup and handle, or a cup and handle and a pullback, or a Landry light pullback in this particular case, then I know I have a few things working for me. Head and shoulders, for instance, often sets up as a bow tie, often sets up as a head and shoulders. And then obviously, as I just said, cup and handle on the downside. Anyway, you can see it pulls back to the moving average, kisses the moving average, triggers, and unfortunately comes back in. Initial profit target's up there. So far, not so good on this one. We have an open loss, at least as when I marked to market here a few minutes ago, of $862. But we're going to stick with it, see what happens. Here's another one that's not doing so hot, okay? It's BTM, kind of a nice gradual trend, then it can accelerate higher. Also, look at this persistency in here. It tends to go up day after day after day. Nice Landry light for a long time, pulls back to the moving average. That completes the setup as a Landry light pullback. Those were the parameters, or there's the parameters there. It's this BTM. You can see it's in the portfolio. And so far, it really hasn't done much. It did have a nice swing higher, but it wasn't really close enough to the initial profit target to take partial profit. So that's a little bit of a bummer. And now we have an open loss of $900. Dave, I'm not too impressed. Well, settle down, Beavis. Just stick with it, right? Now we have a Mr. Chart update. This was in a very solid trend, and you can see the Landry light down below, pulls back the moving average. The Landry light goes to 0 when you touch the moving average. This is what makes it great for scanning, if that's something you want to do, or just kind of eyeballing charts. It helps you see the setup. There's the parameters down below. Entry was here, stop was here, initial profit target was here. Now, again, when you hit that 2% gain on the portfolio overall, now that might be 20% in individual stock, or it might be 25% or more, or depends on the volatility of stock. If we bring that spreadsheet up real quick, you can see these were gold stocks, okay? So the numbers aren't quite as big, but something a little bit more volatile, like this defense stock or this, whatever this stock is here, it was 28%, and this was really cray-cray, 39%. And as I've said before, some people are like, I can't risk that much on a trade. It's like, well, as they said in Caddyshack, you don't get no gold. Anyway, so you bank 1,000 at the initial profit target. Now remember, when you hit that initial profit target, even if it's intraday, you bring that stop up to break even on the remainder. So the worst you could do, barring overnight gaps, is break even. And the best you could do is ride a trend for a long, long time. How long, Dave? Well, 10 years, hopefully longer. I think the longest we've stayed in one was maybe 3 years. And I don't know if Jeff's here today or not, but Jeff, who's usually here, he adjusted one of the stocks we were in for dividends, which I didn't do because usually the dividends are negligible. And about a year ago, he was still in that stock. I don't know if he's still in it or not, but pretty impressive run. Anyway, as of a little while ago, we had 2171 open, so that's 3171 total, and that's not too bad, and that's on a hypothetical 100K, so that's a 3% of change overall. Here's KGC. The entry was here, stop was here, initial profit target was up here. It did eventually get there, and it was part of one of my dead money reports. This thing went sideways for a long, long time. And as I say each week, if I wasn't doing a trading service where people were depending on me and expected me to practice what I preach, I would probably allow myself to get taken out of stocks like this. The other thing it does too is on stocks that I take that are outside the trading service, it forces me to stick with them. It's almost like, okay, what if somebody was watching me? And these are stocks that are usually coming off of the Landry list anyway. So these are stocks I mentioned to other people anyway. I want to do a good job and trade these. Now, I'm not saying that outside of my core methodology, I don't do stupid stuff that I shouldn't be doing sometimes, or over trading or being hyperactive, however you want to look at it. But with this core methodology, I'm forced to follow it. And the having clients is sort of my commitment device, so to speak, on that. But anyway, if I didn't have clients, I might have bailed a long time ago. And then, you ever bail on a stock and then you look at it 2 months later and it's going straight up ever since. So that fortunately doesn't happen with me too much unless my stop caused me to have to exit the stock. Anyway, so eventually we had $1,000 banked. That stop goes up to break even. And as of a little while ago, we had 715 open. So far so good on that one. TFPM parameters were there. You can see the entry was here, stop was down here, initial profit target was up here. Again, this was a pullback to the moving average, Landry light pullback. So $1,000 was banked at that IPT, and then there's $476 open as of a little while ago. So overall, doing pretty good with the portfolio. Knock on wood, check back often, obviously. But this is we're getting back onto the trends again. And if you go in and watch last week's presentation, we talked about riding the trend down, and then you get stopped out of stuff, and then your equity, when the trend turns, your equity turns with it. But then your equity comes back up if that trend continues lower. Okay, unfortunately, when the trend turns again, your equity drops again, and now we're back to the long side. And knock on wood, since the market started banging out new highs, we too are doing fairly well, following along. Well, let's just hope, and I know you said the word hope, but let's hope it lasts. And if it lasts for a while, that's where the real money is going to come in, riding those trends longer term. I'm not going to spend a lot of time on Landry 100 this week. I just want to point out, once again, speculation is alive and well. And if you're newer to the list, I buy everything in this list. The formula for this list is to buy everything at a brand new closing high, okay? And what I do is I create a tradable universe, and I forget the exact numbers. I think it's about 300 or 400,000 shares or more on average. And the stock has to close at a brand new high, brand new 52-week closing high. I might adjust those parameters if the market conditions change, or when the market conditions change, if we go into a choppy market or a down market, God forbid. But for now, I'm finding plenty of stocks at brand new 52-week high. So this one was bought on that day there. And let me just back this out a little. You can see if you squint your eyes, it wasn't closing at a brand new high, but it's a new closing high on that day. It's a very simple formula too. It's like if close divided by the close 250 days ago equals 1, it would be a candidate. And I tend to put the more volatile stocks in and the ones that trade a little more cleanly. Anyway, so far that's had a pretty good run. Now, as I said in weeks prior, there's no money management in this. And on a small scale, I've done some experimenting, and what I've done with my experimenting is when I'm up 100%, I take off half, and that way I have a completely free position, so to speak. But in this list here is just a raw momentum list, and we're not taking off half. And as I said, I think it was a few weeks ago, that one that ran 3,000% and stopped out at 1,700%, not stopped out, it took out at 1,700%. When it was up 3,000%, that one stock would be 30% of the entire portfolio, because it's only 100 stocks, right? So you would have to, if you were doing this in the real world as a fund manager or whatever, you probably would want to scale back on that a little bit in case that stock got whacked. That would have a really big impact. It would be giving up open profits, but still an impact nonetheless on the performance. There's a couple of errors in this pie chart, and I couldn't find them right before the show. So I think it's like it has 102 stocks in here, but it's just one or two of them are off by 1 or 2. But for the most part, there's like I checked the big ones like biotechnology, semiconductors, gold, and industrial metals and metals and software and defense. Those are okay. And so somewhere buried in here, there's a few that are off, 1 or 2 that are off. But anyway, one thing that's kind of interesting, as I've been saying quite a bit, is when you start looking at this pie chart, I know you want to party with me. It's exciting because you'll see that biotechnology is 11%. So 11 stocks out of 100 are in biotechnology. And it's interesting because the biotechnology chart looks okay, but it's got a lot of overhead supply. And if you were to go out and just buy the ETF, that would probably not be a good ETF to buy. However, according to this momentum list, I'm finding more and more biotechs, and that number is actually growing a little bit. The other thing that you can look at when you're managing a list like this is the golds are beginning to come off. So that number is getting smaller. We still have quite a few in there. We still have 9 golds in there. But that number is beginning to get smaller because gold's beginning to lose some momentum. The industrial metals and minerals are doing pretty good, though. So they're still pretty high at 9%, or 9. There's also 9 stocks there. Uraniums, lithiums, platinum, palladium, those metals, for the most part, have been doing well. They've corrected a little bit lately. So we'll see how it shakes out. The other thing that kind of happens that's really cool in here, and I know I'm kind of geeking out, but it's going to find little areas that you might overlook, like right now, small scale nuclear. Okay, I've got one stock in here, small scale nuclear. And then one thing that I should probably do is drill down a little further into some of these like electronic stocks or whatever, because they're power related type of stocks. Like SDLP would be one of those, for example, that's probably buried within other ones. So maybe drill down a little further within some of these sectors like the semiconductors or electronics, whatever the case may be.